Hey everybody, TG Watkins here with Simpler Trading, and today is your Daily 5 presented to you by StockCharts. Today is September 4th. Now we got a lot to talk about today because if you guys have been looking at the market for today and yesterday, you know that there's a lot going on. So let's dive right in and talk about all that. The first chart I want to get into as well, let's talk about the S&P, right? So what we've been looking at is this market has been insane. It just keeps going up and up and up and up. And eventually we knew, if we've ever seen this story before, that it's likely it's going to just break down real quick when there's nobody left to buy. And we did see some indications of this coming. In fact, that's going to be the next chart that I show you. And I want to let you know how I saw this coming and what we do about it once that gets there. Now, if we look back in history, this, if you notice, is early June for the S&P on the daily chart. Now, what I use to tell me when price is really overbought, other than moving averages, I love to use the third ATRs. They are actually built with the Keltner Channels, and you can see them here. It's the kind of thin dotted lines up along here. You can see that back then in early June on the S&P, price got way off of the 8 EMA and was way outside of the third ATR, and that is when we got our first major pullback. And what it did, big picture, was it eventually wanted to get closer to the daily 50. So when price gets too far away from its moving averages, it wants to come back down to it. Now, where are we as of Wednesday? We are once again outside of the third ATR. In fact, we were running outside of the third ATR for several days, running up into something like this, and then we hit it with a peak, and boy, it just turned course and went on down. Now, what I usually do is I talk about, okay, if we see that price is really running on this stuff and I want to find some near-term support, I look down to moving averages, hourly, 15 minutes, something like that. And the only guide that I had for those last week or two was the 15-minute 50. And you can see here that price was following the 15-minute 50. Now, on Wednesday, price really did get up there, got extended, got too far away from the moving averages, but it didn't give us any clues on this day that it was actually going to roll over. So what do? For me, hey, when price breaks the 15-minute 50, I'm out. Now, granted, a lot of my stops got hit. That's perfect. That's how we trade. We make sure that we don't get run over. But as soon as price broke this 15-minute 50, and it did it in a big way, you got to get out, you got to step aside, and if you like to trade it to the short side, then fine, go for it. There are a lot of clues about this, and then you can't quite see it, but the volume on the S&P yesterday was massive, absolutely massive. And then what I have here in this little pop-out window are the internals. This is the advanced volume versus the decline volume, and you can see that all day long it was very, very negative. And then down here, this is the advancers, the number of stocks moving up versus the number of stocks moving down. And you can see that was pegged at a very, very big negative level all day long too. And then same thing with today. So these internals were telling us there was more downside to come, and that's when you just got to step aside from something like this. Now, talking about ways that we could see this. This is the UVXY. This is the leveraged ETF of the VIX, which is volatility, which is essentially the fear index. And what I've noted here is there was a level. Price started going down and then level here. And you can see I have this Moxie indicator that I've created and it tells me everything I need to know about the market and energy and momentum. And that's what I use. It's like my only big indicator that I use is the Moxie indicator. And you could see that it started to turn up. In fact, here's our level. And you could see the Moxie indicator just kept cranking up and up and up. That was giving me some really big, big warnings. And it was telling me, hey, at some point, something's going to really snap. And what we could see here is why was the volatility, why was the UVXY going up and up and up while the market was still going up? They should not be doing that. And it really started to catch some speed when on 8/26 when Jerome Powell spoke the next day. Now, not that his speech is what triggered everything, but it told people to kind of really get moving because of the inflation and all that. It was just some stuff to note. The other thing we could see is look at the volume, really, really big volume coming into this thing. People were starting to load up on this because they could see this, something was getting crazy, something was going too far, and something was going to happen drastically. And then yesterday, massive volume. There was 135 million shares traded yesterday on this. That is almost twice as big as the largest single day volume back in February when the market was melting down during the COVID crisis and all that. So massive volume coming into something like this, and you need to be looking at this and be aware of it. So these were kind of the things that told us, hey, watch out, something's coming. Now, before that, let's kind of get into some good stuff. So this is MDB from a year ago. This is actually June of 2019. And I do this because I guess I got a good memory for these things, and it just comes down to somewhat experience. And I remember I came across a stock I'll show you next, and I remember seeing this particular setup, and I traded this setup, and I made a lot of good money because look at price. It just shot up like that, and I nailed the entry. And so when I saw this setup in the next stock, Billy, I said, oh, I've seen this before. Let's do it. It worked out well once. Let's try it again. And that was from a year ago. And what the move was is that price rose into earnings. Okay, I don't like to trade earnings, and this is why, because what happened on earnings? It dropped. Just a big drop. So buy the rumor, sell the news, that kind of thing. Now what it did is what I call a trampoline move. And trampoline move is when price is below the 50, but the Moxie indicator is above 0. That is a high pressure, high buoyancy type situation. And the very next day, actually for this one, it was the same day, but price recovered. It perfectly recovered. Went down in the opening for earnings, and then it came right back up and got supported. You could see the Moxie indicator was staying above 0 because that was great. And then you can see price was over the moving average on the 15 and over the moving average on the hour. Everything looked good. And so the next, I went in right here back in the day, and then the next day this thing just ripped up and just went crazy. Again, once more time, remember ATRs way outside of the ATRs, and you can see it then failed from there. Now we take that and we apply it to something current, and here is Billy, and this is where I said I saw the same thing, price kind of running up into the earnings report. And then you could see that we dropped on earnings right there. And what did that do? This is why I don't trade earnings, because it drops like that. But what did it do? Price below the 50, the Moxie indicator still above 0. There's the 0 line. That's a trampoline move. That's high buoyancy, high pressure, high move to the upside. And so I went in, I guided and directed the Moxie subscribers into it right there on Friday. Now it decided to kind of hang out just one more day on Monday and just kind of went sideways. Had me wondering a little bit, but I stayed in because it wasn't falling apart and it was still over these moving averages, right? And then on Tuesday, the very next day, then it exploded. Then it really had its move. Part of this might have been a sympathy play because Zoom had its blowout earnings, all of that. And because of the confidence that I had with this and the fact that I'd seen it before, I'm not always an options trader, but when I see something good, I figure I might as well take it. And you can see down here at the bottom of your screen, I actually went big on this one, and I went in with some options, and I actually well, for me, I put $80,000 on this, and I sold half of them at the top at 106% gain on that. Helped me really, put up the account on that. Now, I did sell a little bit more the next morning because it gapped up like this. I don't have documentation of that, but I sold a little bit more because once more, outside of the third ATR is really, really high up there. This is exactly the same outer boundary that I showed you at the beginning of this when we were looking at the S&P and saying, hey, this thing's just not going to last. Now, I thought maybe there'd be one more day. This thing looked a little bit tricky, and so we had to get the rest of it out here, took all of the position out here. It was a mild gain, but the entry was killer. The moves were great, and I bet you this thing would have kept going if the market hadn't imploded. But right there, great gains, 106%, and I really nailed it on that one. Now let's look at one more situation that before the market rolled over that we could take advantage of this. This is Peloton. And one more thing I want to show with the Moxie indicator is here's your level, there's your double bottom, right? And here's your divergence. What this is telling me is that this came back down to the same low, but we're at a higher low on energy, on momentum, and the Moxie indicator shows me that. So that was my first setup. And then I could see that price was coming in here into the 15-minute 50 right there. The Moxie indicator was also turning up quite nicely. And then look at the volume, big volume on that daily chart from down here before, right? Something was going on. The chart looked good, the volume looked solid, we got positive divergence, everything looked great. So I went in, I told the Moxie subscribers to go in, and we got it right there. Rode it for a few days, and then we decided to get out. Actually, pretty lucky on that one. 23% gain in just a handful of days. Why? Look at the daily chart. Look how much in outer space that thing is outside of the third ATR, hourly chart, third ATR, all of that. Now, if you hadn't have gotten out right then at that point, you got to set your stop, at least for me, where the 15-minute 50 is, and you can see that it gave you an opportunity to get out, your stop would have been hit, and then you missed all of this because what it do? It gave it all back. gave it all right back. That's where we say, don't marry these things. You just got to get in, get out, make sure you walk away with the gains. And with that, that is the finish. If you guys are interested, thank you for watching. This has been your Daily 5, once again presented by StockCharts.com. And if you're interested in any more information about me, I do have a free newsletter that I put out. I've been writing about all these things. I had the Billy trade in there. It's profitpilot.com. I tell people what I'm up to and what I do. Check me out at Twitter, Facebook, Instagram. Got all those things over there. And then if you're interested in the alerts that I put out or the Moxie indicator or anything else that I do, you guys come over here. We have a special code with StockCharts, simplertrading.com/StockCharts. And my name is TG. And you come over here, we got live trading, we got interactive question and answers sessions, and then we got real-time alerts. And so I really help you guys out there with the market to go and make some money. So thanks again. Appreciate y'all joining, and I'll see you next time.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.